Guys, what's going on? Amir Garami, MCF Mortgage. Welcome to the MIU episode 14. This is the Mortgage Intelligently University. If you caught up on our mid video, that's the Mortgage Intelligently Deal Desk last week, we were discussing our hiatus from making videos. We've been slammed growing MCF Mortgage to over 40 states. We've opened up a wholesale division to help partners, other mortgage brokers who want to use our products. We've also opened up the commercial lending side of MCF, and there has been established an investment vehicle for people who want to participate in mortgage loans like the loans that we give. If they want to be an individual investor and be the bank basically and have it secured by real estate, and that's called MCF Trust. So, guys, I'm sorry we've taken a hiatus. Hopefully, we'll be jumping on the bandwagon even more and doing more of these videos and delivering more knowledge to you guys out there. Now, today I wanted to discuss debt service loans. These are commonly referred to as DSCR loans, and they've been hyper popular over the past 3, 4, 5 years. Now, what is a debt service loan or a DSCR loan, as everyone refers to it? First, it's important to note that DSCR loans are only available on investment properties. You cannot use a DSCR loan to purchase a primary residence or a second home. Now, a debt service loan is very unique and unlike all other types of loans in that it does not require any income verification. The property itself is the income, generates income, and that income is used to qualify you for a loan. So let's take a step back. If you were generally going to a bank or a lender like myself and asking for a traditional loan, meaning like a conventional loan, an FHA loan, a VA loan, a USDA loan, any kind of loan, we would ask you for income documentation, tax returns, W-2s, pay stubs, details of everything. If anyone's gone through that process, I'm sure they have war stories to tell. But with a debt service loan, we don't look at any of that. We just look at the property's rental capacity as the income for the property, okay, and the income for the loan. I'm sorry. So if the property generates $1,000 a month in income based on rental comps, let's say, that's the income. Now, if that income is sufficient to cover the monthly expenses of the property, which are taxes, insurance, HOA or condo if there is one, principal and interest, the loan is done, right? So let's use an example. Let's say you're buying a $100,000 house. The monthly payment, taxes, insurance, principal, interest is going to be 1,000, and you could rent it for 1,000. Well, the rent is 1,000, the liability is 1,000. It covers itself, so you'll get the loan. It's that simple. Now, sometimes, depending on the locale you're in, depending on the price point you're in, interest rate wise, things of that nature, it may not cover it. So, for example, maybe your expense is going to be $1,400 a month, but you could only rent it out at no more than $1,100 a month. Now you're negative $300. That's okay. We still will give you a loan. However, we will limit how much you could borrow to 70% of what you're asking for. So, for example, if the house that you're buying is $100,000 and the property does not break even, it does not cover its own expenses, we won't lend you more than $70,000. However, if it does cover its expenses, we'll lend you up to 80% of its value or $80,000. Guys, these loans are perfect if you're trying to amass an investment portfolio. And again, it's only for investment purposes. You cannot use this to buy a second home or a principal residence. We do, however, at MCF Mortgage have another no income product that's available for principal residences and second homes. And we'll discuss that on a future video so you guys have knowledge about that. Our products you could use for all types of, principal, second, or investment. However, a debt service loan, if that's what you need or that's what's going to give you the best terms, is only available on investment properties. Now, just because we don't ask for income documentation doesn't mean that a lender is not going to require other documents from you. Now, what can they require from you? Well, there's going to be an appraisal because we want to see what the property is like, what the value of the property is, and the appraiser is going to give us the rental comps for that neighborhood. We're going to ask you for title work. We want to make sure there's clear title. If you own other real estate, we may ask you for mortgage statements on those properties to make sure you're not arrears or behind on those loans, things of that nature. Obviously, your driver's license, your social security card, just to make sure you are who you say you are, and bank statements to document your down payment. Now, one thing that's unique about us at MCF Mortgage is we allow first time investors and first time home buyers to use debt service loans to buy a property. Not all lenders allow that. We also allow for 100% gift funds, meaning that if you're 20% or you're 30% to buy this property is coming from a gift from a relative or someone else, we will allow that. Most lenders will not allow 100% gift funds. They make you put 5 or 10% of your own money into the transaction. For us, it's a no-brainer. Someone who's investing 30%, regardless of where it comes from, is in a good position. And they're most likely going to have a property that they care for, that they're going to rent out, and they're going to make sure that it's a good loan. So we don't have any problem with that. Now, we also allow these loans on true commercial real estate, meaning like 5 units plus shopping centers, things of that nature, industrial space, things of that nature. Now, we do have a debt service calculation worksheet. There's one for residential properties, and there's a more complicated one for commercial properties. If you guys are looking to do a commercial transaction, give me a call. We'll work through the spreadsheet together on the phone. If you're looking at a residential property, it's very straightforward. All we're looking for is insurance, HOA, taxes, and principal and interest. And it's a very simple calculation. I'm happy to forward you that spreadsheet so you guys can use it in analyzing different investment opportunities out there. One thing to also note about us at MCF is we do not require any ratio. So let me give you an example. You are just you're an investor, you have a property, and I forgot to mention, you could use these loans, these DSCR loans, either to purchase a property or to cash out of a property, or even just do what's referred to as a rate and term refinance to, to just pay off the prior loan, which is very common if you have a hard money loan and you don't want to take any cash out of the property, but you want to pay off the hard money lender. So let's say you don't have a tenant in that property because you've already bought it. You're in the process of doing something to it. You're in between tenants. It's okay. It could be vacant and we'll still give you a loan. And even if the factor, the ratio, okay, the ratio of rent versus expenses is extremely low. Let me give you an example. It costs $2,000 a month between taxes, insurance, principal and interest, and the max rental capacity, let's say, is $200. We will still give you a loan. We're looking for the property being a good asset at that point, but we will just limit the amount of loan that we're going to give you. We're not going to give you 80%. We may only give you 60%, but we will still make the loan. So guys, if you're looking again to grow your portfolio and you want to do so without the complications of tax returns, pay stubs, things of that nature, or if you're self-employed and you write everything off, this is a great option for you. Feel free to give me a shout, and I'm happy to share with you every piece of knowledge that I have, any kind of form that we have internally that might help you guys with your debt service loan options. All right, guys, have a great day, and we'll catch up soon.